Private equity means buying private companies to make them more valuable and sell for profit. Sounds simple, but here's what they don't tell you. Your money is completely locked up for 5 to 10 years. No withdrawals, no exceptions. If you need cash for an emergency, too bad. The minimum investment is typically $250,000 or higher, and you could lose every penny if the companies fail. Most devastating risk, these investments are totally illiquid. You can't sell when things go bad. You're stuck watching your investment potentially crater. Hidden fees will eat your returns alive. Management fees, performance fees, transaction fees, they all add up to 2 to 7% annually. For new investors, safer alternatives exist. Public market REITs, publicly listed private equity firms, business development companies, ETFs that track private equity. The golden rule, never invest money you can't afford to lose completely. Private equity can deliver incredible returns, but one bad deal can wipe out years of gains. Start small with public market alternatives. Learn the industry, then consider private equity only when you can handle the extreme risks.